How's it going, fellow traders? Magic Trader here, and this is the CFTC report for the data that was reported on March 8th, 2022. Here is a snapshot of the positions held by the institutions as of that date. And as we always do, let's start by having a look here at the positions held for gold. Now, look what we have here. Positions long. Over the last few weeks, we had them go all the way from 313,000 up to 350, up to 354, now 364,000. That's pretty aggressive. As you can see, that's pretty aggressive, okay? So, what does that mean? Well, what that means is that, eventually they're not going to be as aggressive, okay? Eventually, they're going to take some profits. You see what's happening with oil? Okay. So you see the big spike up here. You take a look at where price was previously, and you see how it failed to close at these highs, all right? And we're very aggressive with short positions, okay? Again, 364,000. All-time max size that they've ever had is 408. We're approaching that. Look at the total size positions, okay? You see how much? 454,000. Maximum size is 463. So they're likely going to be taking profits soon. Okay? And if they take profits, guess what's going to happen? Price is going to drop like this. Okay? That's what's likely going to happen. So I just want you to be aware of that because, if you're thinking about going in long, it may not be the greatest idea to do that at this point, okay? I would wait until some kind of a pullback and then look for an entry. In fact, I think, if I had to trade gold, I'd be shorting gold, okay? That's what I'd be doing. Because once they start taking profits on those positions, boy, oh boy, this sucker will drop, all right? Now we have oil. What do we have here with oil? So oil is an interesting one, okay? Take a look at here. They reduced their long positions from 465,000 all the way down to 455,000. Now, what is it that we've been warning our members and also those that follow us on Twitter and in our Telegram channel? What have we been warning? We've been saying be careful. Why? Because we see all the telltale signs that the institutions were going to push price up and then use that momentum to take profits on long positions. Now, I know a lot of you might be thinking, well, wait a minute. They didn't know it was going to go up. I mean, there's a war that just came out of nowhere, and so that's why price is going up. Well, okay. The interesting thing is that this move to the upside was always planned. It was always part of the agenda. How do we know that? Well, because we knew from down here that price was going to go up there, okay? Now, did we know that it was going to go as high as this? No, okay? How much force comes into a market live time? I don't think anybody can tell you that, okay? But this move to the upside and this amazing pullback here was forecastable, and that's what we did. We forecasted this. We said what's going to happen is the institutions are going to lure a lot of retail traders into going long oil. And as they are doing that, they're going to offload their positions. Okay. And, I've been saying this for many months. And now take a look at what's going on. Okay. Look since back here. You see that? Let me move here. Take a look at this. Since mid-January. What's been happening with their long positions, okay? They are taking profits on those long positions that we were talking about. So now we get the big move to the downside, all the way up from up here. And mind you, right at the highs, guess what was happening? Bloomberg came out and said, that oil was going to be going up much higher. Goldman Sachs came out and gave a forecast for price to go to $200. So what do you think was happening at those highs? Everybody was buying oil. I mean, with forecasts like that, they came true and they came out with forecasts here. They came true and the forecast came here. It was this one where they nailed everybody. So that's what's been going on with oil. I go into a lot more analysis in the EURUSD report for members. So if you're a member, take a look at the report and have a look at what we've analyzed there, okay? Also, with the US dollar, what do we see? We see an increase in long positions all the way back from beginning of February. 40, 42, 43, 43, 46, okay? At the same time, we're seeing a little bit of an increase in short positions, but nothing aggressive. So now we take a look at what's happening on the charts, and we see institutional areas of supply being penetrated through. So what could eventually happen is price continue to the upside like that. It's a difficult chart to read because of the current dynamic that's in play, lack of trends and so forth that we've talked about many times. But over the longer period, we do suspect that we're going to see the dollar heading even higher. All right, so let's take a look at Aussie. We take a look at this one. We've seen price been increasing over the last few weeks. That's mostly because of oil and gold being stronger. And so we take a look here. We see long positions jump from 12 to 19,000. Okay, keeping into consideration that the sells here are colored blue, meaning that those positions are very cooled off. But take a look at shorts, 91 to 97. Now, let me ask you a question. If the Aussie is tied to gold and oil, and it has been strong over the last few weeks, what would happen if oil and gold tilted over and turned over and started heading lower? What would happen with the Aussie? Likely drop, right? Would you start to see an increase in short positions? Yeah, I think so. So is this momentum going to continue? I don't know, but I'm just pointing it out, what's happening here, because they are increasing their short positions by a drastic amount, 91 to 97, okay? Yes, we've gone through these phases before, right? Very aggressive and then taking profits. Very aggressive and then taking profits. Very aggressive, taking profits, very aggressive, very aggressive. That's what caused all these moves like this, okay? But the next one could be a final push to the downside, causing price to drop like that. Could be, don't know, but this is something that we should keep an eye on. USCAD. So we've had both the dollar and the Canadian dollar strong. Canadian dollar has been strong because of oil. So price hasn't been really moving much. It's been staying within a range and it hasn't been really doing much outside of that. But soon we suspect that oil is going to get weak. Okay, it's going to happen over some time. It could take a long time until it starts to really turn over. We saw the initial move this past week, but I think this is going to be a longer term play. But if indeed oil gets weaker, okay, remember, if the chart rallies up, the Canadian dollar gets weaker. If it goes down, Canadian dollar is stronger. We suspect the dollar is going to rally. So therefore, if oil gets weaker, we would expect price to rally up here. And so we've been talking about this for quite some time, about this rally that we're expecting. It's going to take some time, okay? So I'm not really looking for any trades on this chart, but this is something that we should keep our eyes on. US Swiss franc starting to finally make a move within this range on the weekly chart, okay? We have the supply here, and we're slowly moving our way through it. Once this gets taken out, that opens up the doorway for a move even higher up on the chart, okay? So we go over to the monthly chart. We're expecting a move like that up into our target and up to the area of supply that we have mapped out here on the chart. We take a look at positions. We're not seeing much. They held 16,000 long. They just closed some of them off to 14,000 and they increased some shorts. So really nothing to see there in terms of the positions. Euro. Let's take a look at the euro. Look at that. Interesting. Okay. They increased. Longs, 214, 228, 242. Aggressive. Inching closer to maximum size. Look at total size. 426. In comparison to maximum size, they're pretty much there. Okay? They're maxed out with their positions because they have such a large basket of long positions and such a large basket of short positions. They're pretty much reaching their max. So what tends to happen at these stages is that one of them has to give and there has to be profit taking. Okay? Which one's the more aggressive? Longs. So if they start taking profit on longs, what could take place? You will move to the upside. Okay, so that's something that we got to be watchful of, because I think we're seeing a lot of evidence that the dollar is going to get stronger. So we're also seeing a lot of evidence that, you know, the euro can continue lower. But with their positions positioned as they are, we do have to remember the fact that, you know, there's going to have to be some profit taking. So be careful if you're thinking about going short the euro. I would just be very watchful, very mindful of the fact that they're going to have to take some profits on those long positions. Okay. So pound, look at that. Longs, 42, 47, 50. But look at shorts. Okay. This is the big one. 48, 48. Boom. 63,000. Big increase. Now, short positions only are 55% of their overall exposure. We had bearishness here. It became not so much, and it's still kind of there as well. So this can continue building these net positions because, again, we are expecting the euro to eventually drop and the dollar to eventually go higher. That's, you know, some of the strong evidence that we are seeing lately. But we are in an area of demand. And remember what we were looking at with the euro? What we were seeing was that they got to take profits, and that could fuel a move to the upside. With price being in demand, that could definitely take place. Okay, so going to be watching that one. US dollar, Japanese yen. Look at the great, beautiful move that we have here. So we look at the positions. We see a big increase from 74 to 83. And then this past week, they closed off some of their long positions. Okay. They closed off some of their longs. But remember, that is this candle here. So profit taking at highs. All right. That would be expected. But the thing is that we've been expecting price to head up higher for several months. Several months. And we were talking about what was happening on the weekly chart up in this area and how it was indicating to us that price was going to go right up there. And it's now heading up towards our weekly target there, or monthly target at 118.09. This was a trade signal that we had in the portfolio, and it is just working out beautifully. So move up, then supply will come into play. Perfect timing with the euro and the dollar, because then that could fuel a little move to the downside before the eventual continuation. Last but not least, we're talking about the Aussie and what we were seeing. They're cooling off long positions and seem to be focusing a little bit more on shorts, which is interesting because what we were talking about was oil and gold turning over and how this is a commodity currency linked to it. So we'd expect some type of weakness as well, right? So over time, we can see this turn over and head down like that. All right, ladies and gents, so there you have it. Thank you very much. And so thanks for joining. That's your CFTC report for the data that was recorded on March 8th, 2022. Hope you enjoyed it. And if you want to find out more about what we do and how we do it, www.whiteoakfx.com. Thanks. Have yourself a good one. Take care.